Hello everyone, my name is Victor and I'm thrilled to share with you my very first investment analysis video in my channel. And thank you for viewing this video. And just to share with you, I'm a full-time real estate practitioner with Gen A Real Estate. And I'm just sharing with you how Elta on this particular condo called Elta at Clement Avenue 1. So whether this is the right investment choice for you to invest in for your next investment property. So just share with you a background of me. I am coming from an ex-commercial developer. So I actually bid lands for my company as well. I'm an SGM there. So for what we do is that we bid lands, and then after that we got the tender and we develop it to other areas, other developments. Then we rent it out to people, more or renters. We rent it out to people so that they can actually have a place to rent, and we create out a team for the government as well. So one of our successful story is at 44 Pasir Panjang. Currently, right now, it's still standing. It's Pasir Panjang Recreation Center. So we got in for berries. We have berries, which is the enrichment center by Li Guo. And we also do have like anytime fitness, rock climbing, and even we have a bar there to relax themselves as well at the area. And we do have shipping companies. So we create out the ecosystem at Pasir Panjang. So to actually tackle the situation that during the Saturday and Sundays, there's less people being there. So we create more influx of people going towards that area as well. So what I can actually value add to you guys is to calculate the right entry price via my past experience as a commercial developer, and also at the same time to see whether it is wise to go in. Okay, so Elta itself has a location, all right, it's located at Clement Avenue 1. It's developed by MCL Land, okay, and CSC Land Group. So Elta is just right beside two developments that will be called Clavon and the Clement Canopy, being developed by UOL Group, which is part of the We family business that owns UOB Bank. So if you look over here itself, it's located near schools like NUS. You can go through the Newtown entrance into NUS. You can go into Singapore Polytechnic as well. And if your kids are younger, like if they want to go to Nanhua Primary, Nanhua High School, they are available as well. There are other schools at this area as well, but I will just, if you need to know more about this school, do let me know and I can share with you as well. All right, so do contact me over this book below and I will just share you can contact me as well. Yeah, so the location is at Clement, which is in the matured area, and it's definitely a popular area to many, and it's located at the west side of Singapore. So maybe some of you guys are living at the west area, yeah. So actually, I'm actually quite like the west area too, because I study at Singapore Polytechnic during my polytechnic years, and in university is at NUS as well. I think that is one thing that I usually goes to U-Town, one of the area, U-Town. We will actually do out, for me, I will do out the workout there and do my method. And after my maths lesson, I will just chill there a bit with my friends and before going back to the engineering side. So, and also, I like to travel around the area as well because my cell group is around at this area too, at Clement. So there's a lot of fond memories being forged there with my friends and so forth. And but for, of course, right, why am I sharing this is that I also want to make sure that if I'm an investor myself, I would like to also take into account not to mix all my emotions based on their amenities or my fond memories there, because overall I'm doing investment purchase. So I want to make sure to have the best and healthy and maximize profit for my next investment purchase so that I can constantly flip every 3 years to grow my wealth for my next generation as well. So I think one thing it is that for our clients, right, we also want to advise them to enter into the right entry price in their property journey. So means that for all my analysis that I'm sharing you today and also in the future videos, I will actually have a term called the walkaway price, or I would say this is the price that is a cut-off price that we should not be entering it, because there will be more exposed to risk and potential risk. And these are the things that we would like to highlight to you as well, and to share with you what are the risks that we need to avoid. the pitfalls that we need to avoid. So coming back, right, what I'm sharing about this walkaway price is that, take for example, recently, our team itself, we actually went for Trans Parks, and Trans Park actually, we see that we have a certain level, we will not be accepting it, and we actually advise all our clients to move on to other developments to buy. So for Trans Park itself, the context is that we found that from level 2 to level 3, during the booking day, there is a steep gap of 130K difference. And because of that, right, the returns in terms of entering the entry price from level 3 all the way up to all the levels are too high. So we will have to ask them to leave and to go to other areas as well. But in fact, we actually have around two clients from our team that bought under value price at Trump Parks. So that will be around the level 2 site that we are getting. But for the level 3s on above, we try to advise them not to move, and we move them to other areas as well. So take for example, right, for Oris as well. So we also look at Ori. It's very hot in that area, but we also have to advise once a certain level, once we hit it, we will have to walk away as well. So of course, Ori's price is actually very attractive at the start. That's why we also advise our clients to go in. But however, once we hit a certain edge or a certain level, we have to leave it in a way. So there are things that we have to in consideration. Yeah. So sometimes, right, we have to make sure that all these things been done up so that they can reap the healthy profit as well. Yeah. So if you want to know more how we select our units to ensure that we can consistently average 19.8% ROE year per year, you can actually ask me and how we can actually help you. Yeah. So 19.8% year on year, which is one of the highest in the market right now from our team. And I think this is one thing that we can value add to you. And feel free to ask me about anything about how to find the right property and the right unit choice as well. So coming back here, so we also do see that developers have massive discounts like the recent One Bernam. So One Bernam has a 20% discount during the nearing to their TOP date. So what happens is that the people who bought over previously, they actually might not be earning as much or even lose money as compared to other buyers who is entering at a later stage with a 20% discount. And actually, that is a very stark difference. So actually, sometimes, right, being in the new launch situation doesn't mean that once you get the ballot, you will sure definitely get what you will need to, you will sure win lah. But tentatively is that we also educate and share with our clients that we actually, for me, I feel that you also can earn through those units that is still remaining in after the launch. So there are also a lot of hidden gems units that we actually do a lot of analyze, and to make sure that this is the unit that actually can earn as much as those who have just bidding for with a good number in new launch as well. So we are able to do that to analyze for you as well. Okay, so now let's look at the land parcel at Clementi 1. We look at the bid as well. So we look at it at the number 1 bidder here, which is the current developer who wins the bid, CSC Land Group, Singapore Private Limited, and Caspian Residential 3 Private Limited is getting at 633.447 mil, followed by CDL Concession Private Limited, Fraser's Property Citrine Private Limited, and Sekisui House Limited. They offer at 608.88 mil, very nice number. And NQC Realty Clement Private Limited will be the number 3rd one, with 4C Residence Private Limited bidding at 570.7 mil. So I mean, if we see over these top 3 bids, right, the average is around 25 to 38 million difference. So it's a very healthy bid, I would say. And that also translates that there's no sudden bidding jump amongst the top bidder as compared to the second bidder. So now let's look at the units mix at Elta. So 1 bidder plus studies, there's 36 units A1s, type A1. 2 bidder B1, B2 have 72 units. 2 bidder premium, 71 units. 2 bidder plus study, 36 units. 3 bidder, 72. And if you read all the way down, total amount to 501 units. So we have seen, right, the average area per square feet for 1 bidder plus study is 506. 614 for 2 bidder. 2-bedder premium 700, 2-bedder plus study 807, 3-bedder 926, and so forth. All right. So can refer back to the amount, and I will share with you more about the unit breakdowns, particularly on the more general units will be the 1-bedder plus study that I'll be sharing later on, 2-bedder, 2-bedroom B1 and B2, 3-bedroom C1, as well as 4-bedroom D1. So these 4 I will cover in terms of the entry price. What is the advised entry price as well for you guys later on. All right. So now come back to the let's try to find out the launch price of it, the estimated launch price. So if we look at it, here are the costs that include the build Elta. All right. If you look at it, the land cost here is 633.5 mil. You see the construction cost will be at 197.6 mil. Land financing 99.8 mil. Professional legal tax 99.7 mil. Marketing/other 61.8 mil. So total cost estimated is 1092.5 mil. And to get the estimated break-even, we take the total estimated cost divided by the site GFA, divided by another 10.76 to get a break-even pricing of 2156 per square feet. However, due to post-harmonizations, we will also actually need to account in the break-even square feet at 2307.62 square feet. That would be 7% times extra 7% from 2156 square feet to factor in the post-harmonization. So means that at 2307 square feet is the price that the developer has to sell in order to cover their incurred costs. So we come with 2 scenarios that could happen. It would be the 10% at 10% profit margin and 15% profit margin. So if we look out at it, is that if it's at 10% profit margin, that will be at 2538 per square feet. And if it's launched at 50%, it will work out at 2654 per square feet. So if we look at if the developers want to sell it out fast, that's when some tips that I find that as a commercial developer, we tend to also we tend to also look at the response rate from the tenants as well. But in particular for new launch would be the buyers lah. So if let's say for the buyers wise, right, we look at it during the launch day. So there's a lot of people submitting checks. There's a lot of people, like interested. It's very full house, right? This also seeing how the developer wants to do their price staging to see how they want to sell their unit out in terms of earning the maximum profit. So some developers might also want to get their units to sell out fast. Some unit developers, they want to sell their units to be more in terms of at a priciest price so that they can max out their profit. So if there's a lot of people coming in, there are also developers, take for example, I would say Trump Park, they will actually price at a higher price from it so that actually there's still people buying into Trump Park as well. But of course, if you look at other developments like the Oris, so the price is actually lower despite there's a lot of turnout rates. And because of that, it sells out very fast also. So it also depends on the pricing strategy of how the developer is looking at. So we coming back over here, we look at unit comparisons with nearby developments. All right, we look at the competitors lah. So we will say it's a friendly competitors of Clavon and the Clement Canopy for Elta. So we look at it for the 1-bedder plus study, particularly if you look at the type of this 1-bedder plus study between Clavon and Elta, is actually quite similar price. I mean, quite similar size and layout as well. For the Clement Canopy, there is no 1-bedder plus study, so we will omit it as well. All right. So we look at it at 1-bedder plus study for Elta. Is actually we look at a 10% break-even price. So now let's look at the 1-bedder plus study for Elta. We look at 10% away from the launch from the break-even price. That will be 506 times 2538 square feet. That will be at 1.28 mil. So that would be 10% from the break-even price. If let's say developer wants to just earn 10% profit. Okay, so if you look at Clavon's 1-bedder, that will be at 1.053889 mil using 527 square feet times average of 1998 square feet that is currently selling right now. So that will be amount to 1.053889 mil. So we look at the difference between Elta and Clavon is around 4 years plus apart. Based on this, the price gap has around 27% gap difference from the average unit versus the average unit price in Clavon. So there's a price gap difference around 226K, which is 27% 27% gap difference. So we look at the one bedder plus study over here. If you are looking into it, I would say that you have to find the right unit that is slightly lower than the average stated price of 2538 per square feet. And I would personally advise to likely enter in around 2002 to 2003 PSF. So of course, we also have to see which particular unit and level to select as well, not just based on the entry price, to determine this is to maximize the best profit as well. Yeah, so these are other factors to consider as well. So now let's look at the Elta's two-bedder. Okay, so for Elta's two-bedder here is actually at 614 square feet. Okay, it's at 614 square feet times 2538 per square feet, which is the 10% from break-even price, will be amount to 1.558 mil. So for Clavon two-bedder, right now the average is around 1,990 PSF. So the two bedders actually, if we amount it out, is 678 square feet times 1990 PSF. That will amount to 1.349 mil. So if we look at two-bedder Clement Canopy, it's at 635 square feet, two-bed bath, times average of 1887 square feet will be around 1.198 mil. So if we look at the gap difference, okay, from Elta and Clavon's, all right, the unit type are similar, the B ones. The price percentage difference is 27%. All right, so there's around 209K difference. And I believe that if let's say you want to go in, I would suggest to go in around 2002 to 2003 PSF for entry price. So now let's look at three bedders here. So three bedders type C1 at 926 square feet for Elta. If we change it if we convert it into the 10% from the break-even price, the launch price, so that would be 926 square feet times 2538. That would be at 2.35 mil. All right. So Clavon wise would be at 958 times 2114. That would be around 2.025 mil. And Clement Canopy, which is the three-bedder plus yard, which is the nearest comparison that we have in our data, is 990 times 1863 square feet. That will be amount to 1.844 mil. So difference between Elta and Clavon here is around 325K. And I recommend the entry price is to enter in is around 150K difference. All right. So that will comes around 2.22 mil, around 2375 PSF. That would be for three bedders for Elta to enter in. So let's look at the four bedders for Elta as well. Okay, so for four bedders for Elta in type D1 is 1184 square feet, which amounts to 25 times 2538. So with 1184 square feet times 2538, that would be amounts to 3.004 mil. And Clavon's, if we look at their four bedders, is at 1281 square feet times 2035 PSF average. That will be around 2.606 mil. The Clement Canopy will be at 1346 square feet times 1846 per PSF. That will be 2.48 mil. So for four bedders, the difference between Elta and Clavon is 398K. So if we look at Clavon and the Clement Canopy four bedders average pricing, we compare these two developments that we have right now, the amount of difference is at 126K. So now let's dive into Clavon's profitability. Their average profitability is around 600K with around 3 years holding period. So now let's dive into this unit itself at Block 8, Level 12, Unit 14. It's a 1281 square feet size. Okay, they purchased it on 30 July 2021. Okay, and their purchase price is at 2.025 mil. On 4 September 2024, they sold it at 2.65 mil, and their profit is 625,000 with an average PSF of 488 gain. So holding period is around 3 years. To enter into a safe entry for Elta, a healthy difference of 150 to 200K between Elta and Clavon is a good entry price lah. So that translates to Elta's investing at 2327 PSF to 2370 PSF, which is amounts to 2.756 mil to 2.806 mil at near break-even pricing. As likely the developer for Elta might be pricing in terms of prudently, in terms for the lower floors. That means that there's only certain floors and units we could consider that is more of a safe entry to reap a good profits in the future. So if you need to have in-depth analysis to you need to choose. So if you need an in-depth analysis to choose, do contact me. Our team has achieved an average of 19.8% year-on-year return of equity net. That translates to if you invest 400k cash plus CPF for a one-bedder or even for a smaller two-bedder, all right, into an investment property, our average return is around 79,200 per year net return in profit. And in 3 years, our investors profited around 237,600 net return on top of their 400 cash invested plus CPF. So we are talking about this 236. So we are talking about this 237,600 has net factor in of minusing already the buyer stamp duty, the service fees or lawyer fees and all these things. So it's totally net, and also factoring minusing away the interest part in paying for the property over the 3 years span. So that would be 237,600 net. So just to share with you, these are some of the things that we have. And thanks for listening. If you need any analysis or any questions that you want to know, do let me know. And I'm happy to share with you in a non-obligatory consultation so that you guys can actually benefit and value add to your investment journey prudently and invest wisely. So thank you so much. And my name is Victor from JNA. Do contact me and I'll be posting more things out and to improve my video quality as well, so that you guys can benefit more from my sharing as well and from my experience. Thank you so much and take care. My name is Victor, signing out.